Hello, hello, hello. How y'all doing? I see we have a few people on. Go ahead and drop me a comment. Let me know who you are, where you're from. Hello, hello. It is a cool morning here in sunny Florida. Where are you from? Today is going to be a engaging platform. I'm so excited that you chose to come here to, hey, be with me. Not only that, you can be receiving this information from anywhere in the world and from any YouTube channel, but you chose to come here. So since you're here, if you're not subscribed, go ahead and click the subscribe button. Yeah. Click notifications so you can know when the next video drops. And not only that, hit notification, hit subscribe, and hit the like button. That is going to help more people see not only this video, but the channel, and allows for more financial education to be distributed throughout the community and eventually throughout the world. So again, I'm so excited to be here today. And I am not a morning person, but I was like, you know what? Let me go ahead and transition, because one thing about being an early morning person, we can get so much done and out of the way before the day gets ahead of us, because we never know what's coming. So it's like better to just go ahead and knock out the priority things first thing in the morning. And since this is such a important topic, I was like, you know what? This needs to be a Saturday morning topic. Yes. So once again, thanks for joining in. I am waiting to get these likes up. I need at least 2 comments here. I need to know who you are and where you're from before we get started in this convo. I started this conversation around talking about the Wendy Williams incident. Started around last week, and it was a hot and heated conversation with a lot of people weighed in on a lot of opinions. So I definitely want to kind of get into a lot of things that came up from that conversation. Oh, this camera needs a little bit adjusting. Y'all, how I look? Is the light right? I'm sitting here in the sunshine. Hello, Coach. Thanks for joining in this morning. We got a couple more likes to get up, a couple more viewers to join in. So if you're on right now, go ahead and share this broadcast. Yep, go ahead and share this broadcast. Press the like, drop me a comment as you come in, and we will be getting started as soon as we get these comments, we get these likes up. Not before. All right, we still got one viewer. I'm going to wait a few minutes for a few more viewers to chime in before we kind of weigh in on the discussion. All right, I'm back. Thanks for commenting and dropping who you are and where you're from. So glad you decided to join in this morning. You could be doing anything else, but you decided to come here. So let's go ahead. Let's get started. Wendy Williams, that has been a hot topic for the last few weeks. Not only just Wendy Williams, but really what's weighed in is Wells Fargo more than just Wendy Williams, because it's really not about her. It's more that she's in the limelight because of who she is. But this has not been the first go around with Wells Fargo. So before we get into that, I definitely want to introduce who I am. My name is Shalita Shante. I am from sunny Florida. Since I'm here on YouTube, I'm going to be meeting a lot of new people here. So as you come in and subscribe, I definitely want you to get to know who I am, as well as get to know who you are. So I am the founder of the Millionaire Portfolio Group economic consulting firm, where I work with entrepreneurs, marketing campaigns for small business owners, and also the municipality sector as well. So it's very exciting here. I love Florida. I don't think I will ever want to go live anywhere besides Florida. It's very, very exciting. So yeah, let's go ahead and weigh in. Like, what has been your thoughts surrounding around, not for say Wendy Williams, but more so we've been hearing so many things about different the practices of Wells Fargo, other banks, and I don't really, I don't know what it is, what's going on. So what they call it is, what do they call it? Predator lending, predator practices, and we've seen it so much throughout time. And listen, Wells Fargo is one of the oldest banks that has actually been around since 1852, over 100 years. I mean, they've been through everything, all type of economic situations, depressions, inflation, one of the banks that didn't have to be worried about getting bailed out in 2009. So they've been around. They've been around through a lot of people not having, equality, minorities. So it's been a lot. Can I say that? It's been a lot. So, so yes, let's get into it. When people kind of discuss the Wendy Williams thing, it was like, oh, she got millions, she got this and that. But you know what? It's not even about the people with the millions. It's also affecting just regular everyday people. And people are, they're like, how can they hold her money? How can they decide this? Well, as a bank, and when they actually assign what they call a financial advisor to an account, those people actually take on fiduciary roles in that individual account, which gives them the right to decide on their mental health, or if someone is trying to actually take advantage of someone. As a licensed agent and broker with federal license as well as state license, we get trained on how to spot fraud, on to hold money or hold an account if we determine that someone is trying to be fraudulent, trying to assess their family funds without their family knowledge, or anything. So until we can determine if this is real, we will hold those funds. So it is legal. But can I say this? When banks get a notice, not just banks, but investment companies as well, when they get, before you can take your money out, and let me tell you, Wendy did not roll up there and be like, hey, just, give me my millions. Let me withdraw all my money out of the account. That's not the way that people with money roll. What they do is do what they call a qualified rollover, which means they're going to take money from one account and they're going to roll it over to an IRS qualified account, so they will not get tax implications. So with that, one institution gets a notice to the other institution that, hey, we're about to get that money up out of there. And so the other institutions like, wait a minute, hold up. I don't want to release these funds because right now I'm making a lot of money off holding these funds and these funds being here. Matter of fact, I don't even have all the money right now. So hold on, since you gave me the notice, let me go talk to the shareholders. I need to go grab this money from where I distributed it. And I need to bring it back so I can give it to her because she's asking for it now. The other account holder where this money is going to is asking for it. So in the backdrop, that's how things are going on behind the scenes that a lot of consumers really don't know about and not aware of how that works. So is what they're doing legal? Yes, but are they biased? Of course so, because they do not want that money to leave their institution. And the longer they can hold on to it, is the longer that they can make money off of it. So that is definitely a piece of that, of how that goes. So if you have any questions related to that process, go ahead and type them here. Anything you want to weigh in, any comments, type them here. I tell you, Wendy Williams has really been going through, and I know she's known for coming on the scene and being very mouthy, talking about people, so it's kind of like, well, she's reaping what she sowed. But at the end of the day, I don't like bullies. I don't like to hear people talking about other people when they're in such a bad predicament or really going through, so yeah, she's had her share, but at the same time, I've seen her grow. I've seen her actually, come onto her show and really let out some apologies. So, I just don't like bullies. So if I'm around and somebody's talking about somebody else, I'd be like, hey, that's not what we're here for. That's not what we're here for. If you're not here to grow and learn, then hey, what is the point? So we have a comment here says, how do you put your money into that type of investment? Well, if we're talking about the bank, basically, the bank was originally set up for loaning. It was set up to hold people money, whether it be like regular savings account, all that kind of stuff, to hold that money to be able to turn around, and the bank invests our money. And so a bigger question is, well, who is the bank investing our money with? But in order to invest in the bank, what they do is position a licensed financial advisor, someone that holds federal license, and they position them to be able to do the transaction, because there's a special type of license you have in order to make those transactions with the bank. So the bank has what they call added on to their product portfolio throughout the years by offering an extended amount of services. So before we get into it, I'm going to get my disclaimer. I am not here to make any type of advisory on any type of products or any type of services. This is purely an education platform. So that is not why I'm here. Although I do have a consulting firm that does do that on an individual basis. But this show is purely for education purposes. All right, so we got that disclaimer out of the way. So yes, this is amazing. This is very amazing. This conversation is very, very geared toward really being able to see what is the difference between being a member of the bank versus what are my other options. So what are your other options? Because as a member of the bank, what do you get? What is the benefits of that? Well, for one, me growing up as a kid, I knew when I rolled up to the bank, the one thing I was going to get was a lollipop. So I became excited about going to the bank because they were going to give me a lollipop when my mama came up there and deposited her hard-earned working check. So I got a lollipop when I rolled up there. So going to the bank is a tradition. That's what we do. We get paid from our jobs and we go in there. Now they have it fancy. They have this direct deposit. So we're directly depositing our monies into this institution, right? And we just become so trained and so used to doing it. It is a way of life. It's the way that we pay our bills. It's the way that it's convenient. So the bank knows that they've made it very convenient for us. So with that being said, they do what they call cross-selling, right? And Wells Fargo is actually in trouble right now. You can Google that on your own time, but it's called cross-selling. It's when a person has actually did business with a company. And once they're in the system, now they are leveraged to the team members that do other things like home mortgages, financial advisory services, auto loans. The number one thing is disability life insurance, which I can't stand. And it's little or nothing. It's little or nothing for a reason when it's offered through your bank. So, but I won't get into that on this segment. But these are what they call cross-selling. So banks are very known for that. That is exactly what they do. However, I would not do any type of investments with the bank. And I'm going to get into that right now. I'm going to really tell you why would I not invest with the bank. All right, so let's get into that. If you have any questions before moving on, any thoughts right now, go ahead and comment your thoughts. If you're new, if you just chime on, go ahead and press that like button. If you've never been to this channel before, subscribe. Please do subscribe. I need all the subscribers I can get right now because this information is so valuable that it's invaluable. And you know what? That's a lot. That is a lot. I just said a lot without saying much. So for this segment, we're going to get into mutual company versus stock company, right? Now, I'm really upset though because I ordered this huge dry erase board that was supposed to come in from Amazon. And I'm telling y'all, Amazon has not been on their job lately at all. The whole 2-day Prime thing, that don't even exist anymore. And I'm so upset about that because I ordered it and they left a note. They left a note in my mailbox that told me they could not fit my dry erase board inside of the mailbox. Really, Amazon? I didn't think the dry erase board could fit in the mailbox. So I was going to really write these things out so it can be easy for you to take notes, but that didn't happen. So now we're here. So if you got your notebook, you know what? This is the time to pull it out. Y'all thought I was playing. I'm really serious. I'm about to drop some jewels right now. About to drop some serious jewels right now. So we're going to do a compare and contrast. You know, we just got through talking about what the membership at the bank will get you. It will get you cross-selling opportunities. You will have a place where you can conveniently pay bills from your savings or your checking account. Great. That's what I use the bank for, to pay bills from my checking account. The savings account I use for emergency savings. That is it. And that is all. So mutual company versus stock company. Stock company, we are very familiar with. Everyone has done business with a stock company. Now, you probably more than likely did business on the consumer end with a stock company. So how is a stock company identified? Well, it's owned by shareholders. That's what makes it a stock company. But the biggest thing is that it is a corporation that has went public. That's major. That's why when you hear about companies going public, it's really major. That means they're about to change their entire business structure. Is completely changing, where they no longer privately own the company, but it's owned by everyone that actually holds a share. That is why it's called public. Now, I'm going to switch over to mutual company. So the mutual company is owned by policyholders. Okay? So now we are talking in reference to insurance companies, right? Okay, so insurance company, there's two types. One is a mutual company. The other is a stock company. Two totally different types. You know what I mean? All right. So with the mutual company, it is a private firm. It could be a sole proprietor, or it could be a limited partnership LLC, could be a partnership LLC, S Corp. It can even be a corporation, but it cannot be public for it to be considered a mutual company. I'm going somewhere with this, so pay attention. This is all very important. If you just chime in on, this is my second episode on the YouTube platform. Thanks so much for joining in. I'm going to be saying that on a regular basis over the next couple live streams. Thanks for joining in. Like this button if you haven't subscribed. Subscribe now and hit the notification bell. This is about to get very interesting. So there are two different ways where each company can increase their revenue. So let's go back to the stock company. The stock company increases their revenue by selling shares. That's how they increase their revenue. The mutual company actually increases their memberships by selling more policies. So the stock company has a dying loyalty to increase their growth, because they have to report back to the shareholders. The shareholders are looking to earn money from that company when they buy that stock. So when we're talking about the mutual company, that company is actually dedicated to their policyholders, and they are committed to increasing more policyholders so that in turn, the mutual company shareholder can get paid in dividends. Now, this is so important. And we have a question here. One is private and one is public. Correct. That is correct. One is private and one is public. The private company is a mutual company, and the stock company is the public company, the company that went public. Okay, that's why they make it such a major thing, right? So here we are. Let's get into dividends. This is going to be the fun part, right? Let's get into dividends here. All right, here. Okay, so the dividends, what the dividends are. The dividends, but I want to take it lightly that everybody knows what dividends are. So the dividends, they actually represent a portion of the insurance company's profits. That's what dividends represent. So when it comes down to buying shares, so the big question is this: how can you become a member of an insurance company, right? Now, you may be a policyholder of an insurance company, but that what that does not entitle you to be a member. Now, that's huge. That's huge, because there is a lot of people that own policies, but there are even far more few people that are members of an insurance company, which will not only entitle you to the proceeds of your policy, but also dividend payouts from the insurance carrier. That's major. I just wanted to be quiet right there because that is major. So let's go ahead and disclose a faulty myth, right? So faulty thinking. Well, life insurance is it's created, or it's for burial. That's what life insurance is. Faulty. That's so false. Life insurance was not a product that was created to use for burial expenses, or use to cover a funeral, or any of that. The purpose for life insurance. Let's get into the purpose for life insurance, because I'm going to say this a lot. You're going to hear this come from me a lot, right? The purpose for life insurance is to, 1, protect income, 2, protect assets, 3, earn money, 4, protect family legacy. So how did we get involved in the idea that life insurance was to provide coverage for burial expenses? Well, somebody real greedy said, you know what? It's a demographic out here that, don't have a lot of money, right? So they probably won't get, $7,000 to $10,000 to bury their loved ones. So let's go in here. Let's create a product that, just kind of focus on covering that expense. So people targeted, not people, but licensed agents, insurance agents targeted a group of people that did not do financial planning. And because they did not do financial planning, they enticed them to buy insurance that would cover burial. And that is really pushed a lot. Even new agents that are coming on, they're saying, you know what? You shouldn't be doing a GoFundMe. But that's a whole another topic, so we won't get into that. So earn, question here says, earn with insurance. They didn't teach us that at school. No, they did not at all, right? I don't know. I took home economics. They taught me how to cook and taught me how to sew, but they did not teach me anything about financial structure and how to run a financial household, or even how to run a business. No, that was not done at all. All right, so let's get into this. Let's dive just a little bit deeper, right? I have about 20 minutes left to really dive in. So, how to become a member? Well, you have to first find a carrier that is an old carrier, because they don't do this anymore. So it has to be an insurance carrier that's been around for over 100 years, right? So I'm going to list a few. There's Guardian Life, Protective. Those are a few insurance carriers that will pay out dividends if you are a policy holder and if it is formulated in the correct way, right? Mass Mutual, been around for forever. Foresters, those type of companies have products that will pay dividends, right? So that's how that goes. Okay, I'll check it out. Oh my God. Okay. Get down. Listen, she don't like lizards at all. Completely freaks out. So hey, that's what this is right now. Wait. All right, guys, we had a lizard emergency. Sorry about that. So let me dive back into it. I'm telling you, little girls and bugs is not a match. They just go completely ham, right? So we left off at basically insurance companies that actually offer these type of member benefits, right? All right. So here we are. So here we are. So, what determines how much you can get paid? So in order to first be a member, you have to be a policy holder of that company, right? Either one of the companies I just listed. Those are just a few, right? So your portion actually depends on the amount that you pay into the policy. That determines your percentage of shareholder. Okay? So let's talk about risk, right? Risk is very important. Everything involves risk, right? Everything. So the risk in investing in a mutual company is that they may not declare earnings for that year. If they don't declare earning, you will not get paid from that policy, from being a policy holder, from being a member, from being a shareholder, right? So that is Lord. All right. So I'm back talking about risk. All right. So with that risk, the risk is they might not have an earning. Hey, hi, Ramona. Thanks for chiming in. So that's exactly what I'm getting into right now. Didn't even know you were on. Thank you, Ramona from Florida, South Florida, that is. All right. So how to determine how is the risk determined? Well, the risk is just that if there is no growth, then the shareholders determine if they're going to give out a dividend or not. So the biggest way for the consumer, which would be you, to do a risk analysis is to, one, you check the credit rating for the carrier that you are looking to become a member. You check the actual credit rating. So insurance carriers have what they call a credit rating, where they can be an A+ rated company, a company, a minus company, and on down from there. So what you're looking for is A+, A. And that's how you kind of do your cost analysis. And then you also look at the history. So even though the risk is that there may not be a dividend earned that year, this is the thing. All of the oldest and largest mutual insurance companies in the U.S. has not went without paying a dividend in the last 150 years. And there's a lot that's happened in the last 150 years. There's been recessions, depressions, inflation, all of those things. And every single year, the insurance carrier has paid out a dividend in the last 150 years, right? So we're talking about risk, cost, the risk, the analysis. How do you determine? Now, this is a way that people have accrued wealth. This is a way that people has created their own banks for themselves. I think a lot of people, it's a popular term called velocity banking that's going around. Well, this is how this is created. Okay. Now, the funny thing is families can do this. Families can put together operating agreements. They can create LLCs, memberships. They can have shareholders. All these things can be done within a group, within partnership, all those kind of things, and to build a very strong foundation for a family, a community, all these type of things. So this is how it's done, right? So the reason why the wealthy people choose this avenue, and we hear about this all the time. We hear about taxes. It's a major component, but it's only major to the people that it's major to. So only if you're in a certain income bracket does it matter, right? And so do we want to avoid hitting the type of income bracket where we're concerned with taxes? No, not for me. You know what, I want to hit that income bracket, be concerned about it, and then know what I need to do, right? So the huge thing is, unlike other retirement vehicles or investment vehicles, like say your 401k, your 403b, your Roth IRA, your any type of other IRS titled investment vehicle, your dividends, you earn your dividends tax free. If it's a participating life insurance policy, it is not subject to tax. So even in your regular savings account, it will send you that little statement at the end of the year saying that they didn't tax you on that little bit of, on them couple of dimes you made on your savings. So imagine that you're having a tax-free earning. Your income is not tax-free. So this is the advantage. This is the major advantage for accumulating money, wealth in these type of things, right? I have a client right now where she's an entrepreneur, so she has a flaky income. Not that all entrepreneurs have a flaky income, but she admitted that her income is flaky, or it's probably where, you know, she probably has it here and there. She really hadn't put in the structure to where she can have like proof of income, all those type of things. Well, there's two concerns too. The income, be there to invest in it, because we're going to look at that to make sure that you can afford the investment. Not only that, there's also health. How's your health? Now, if a person is not healthy, but they still want to invest in being a member of a mutual company, they can always own a policy on a healthy person. So there's ways to go around that. They can be the owner of it and not the insured. So there's a lot of different dynamics. And like I said, I'm not here to advise, only here to educate. And right now, what we'll do is get into any questions. You have any questions? Is there any more comments? Any questions? Any more comments? Anything you would like to share? So, yes, I kind of touched on the velocity banking. These are methods used for velocity banking. These are methods used to, pay your home off quickly, 5-7 years. These are the methods that are used for these type of measures. These are the methods that are used for what they say in, like, you being your own bank, where you don't have to borrow money from a bank, where you use these funds to create your businesses. You use these funds to safeguard from any type of insurance funds are safeguarded. They're safeguarded from debt collectors, all those type of things. No one can come in and attack, you know? So if you didn't catch the live earlier this week, we talked about the importance of trust, of owning a trust, right? And we talked about the will. You know, a lot of people discuss the wills, but not really discussing the trust. And all these things, they have their specific place inside of your portfolio. So this is what it comes down to, you know, building your portfolio, knowing about all these specific elements, and then bringing them all together. So just having your own personal team is so important. Just, you know, outside of, you know, I work on my job and I call, you know, human resources works for your company. So which meaning that they're going to do what's best for the company. You are secondary. So you want to make sure you hire or have your own broker, your CPA, your attorney, you know, do consultations, you know, with these people. You don't have to have them, you know, on reserve or anything like that. You know, but it really matters to do consultations, strategies, you know, so you can kind of know where you are. You know, if you had major changes in life, you want to go back and take a look at things you may created before the major changes happen. So that's very important, right? So if you need any type of assisting in this type of area, this is something that our agency does. More than happy to do a strategy session to kind of see where you are. You know, if you have someone that you trust that may be an agent, these are things that you can ask. But our firm is actually a brokerage firm, and we house over 30 carriers that can easily assist and have the you know, what's needed in place to assist with these type of policies, because these are very super niche. And, you know, I've been in the industry for 12 years. And so it's not something that every agent or agency does. So thanks for joining in. Is there any more comments, any more questions? I think that's about it. Well, hey, if you haven't subscribed yet, go ahead and click the subscribe button. Share this. I will leave it up for the replay. So share it out for me. Just get the views up. The more views I have, means the more that I can expand in this platform. So thank you very much for coming on. I appreciate you. Thank you for all the comments. Thank you for all the questions. And I will see you next Thursday. Bye. Or it's Saturday, but I'll be back on Thursday and then again on Saturday. Not that today's Thursday. I'm so silly. Bye, y'all.